Hey guys, welcome back to another edition of the Red Folder Strategy or the journaling process. What we spoke about every week now, in the past, and we spoke about it on Sunday, but we've been speaking about it every week basically. So I did not post this last night because FOMC was, late in the day, and there was no real setup, and I'm going to take you through it step by step now. What I was looking for, what happened, just to prove to you guys this process is working. The strategy is super simple and it is so effective. You only need to know how to trade this and you can plan your life around this thing, and that's what you do. Alright, so I've got the chart open here. What I want to do quickly, I want to show you guys I don't know, let's go to a 4-hourly chart quick, just so you guys are familiar with what my lines are. Alright, so don't look at all of that. So you'll see, let's make this a red line so you know what I'm talking about if we talk about the red line. On the 4-hour chart, without looking price going through it, you'll see I've got all these equal highs sitting here. So we've been marking this out for a while now, and obviously that was some sort of catalyst for me saying that FOMC, that's where we're going. But let's jump to the 1 minute where we're gonna have a look and see what happened and how it all unfolded yesterday when they obviously put the FOMC minutes out. Alright, everybody can see this. Alright, let's start from the beginning. First step is wait for that big candle to come and violently take out buyers and sellers on both sides, trapping in position holders, creating that nice liquidity for us to come back and then target those liquidities. Okay, so 8:30 in the morning, 2 o'clock in the afternoon, that was when FOMC news came out. And we see that big spike down. We see a little spike up, but I've marked out the spike the minute after that spike up, because there was nothing in here giving me any entry to take it down to the low here if I had marked this low out here. So now I've got a target up here and I've got a target down here, but remember that red line, that's a target on the daily equal highs that was printing that I showed you on the 4-hourly now. So these very close to each other, so that becomes my ultimate target. So let's take us through it. So the liquidity was printed. Now we're waiting to see where we're going first, and we pretty much stayed within the range for almost to the end of the day. But when we came to 3:15 in the afternoon, that's normally when the PM macro starts run. It's between 1:15 and 1:45. I was hoping to see something running the sell side, knowing that we start printing liquidity. We've got all this liquidity up here, so it would be a nice trade where it dips down, give us an opportunity to go higher. Alright, so then I came and I keep a close eye. We got this big black candle creating this fair value gap. I've marked it out. I was excited. We spin through it. I'm like, okay, so maybe we want to go lower again, and that's when I marked out liquidity. And then maybe in the macro time we'll see this run up to our target. But anyways, so we got another white candle that inverted this fair value gap, waiting for the test of this. It never came about, and I never got my entry. And then we drop with aggressive candle down here, leaving another fair value gap. I then thought to myself, okay, so we creating some sort of equal lows here. We might drop in it and then go higher. But in fact, we got this white candle inverting this fair value gap, and I had to stick to my rules. I entered on the test, and on the 50%, it gave me a nice entry, and we start running high aggressively. So I thought I was on site. I've got liquidity here. I've got everything waiting to be taken. And one thing that I do with my inverted fair value gaps is the minute we break a swing high, which is this one here, this is where you can take your first partial. So by the way, but I was holding on, I moved my stops to break even, and hoping that we're gonna go up here, and I would have taken my first partial up here to close it, because that seems like a safe place. It's late in the day and I don't want to get caught in a position overnight, and I literally don't keep my positions overnight. If it goes into too late, I'll just close it and lapse it and wait for the next day. Alright, so I entered here and then I got stopped out at break even, and I sat through all of this waiting, and as you can see, no fair value gaps formed on any of these candles. It was just spikes on all sides, accumulating for the move. There's a candle here, but there's nothing inverted. At this point I call it quits, and I said I'll come back maybe on the red folder news today. It will give me an opportunity. But what I did do is, I mean, if you really wanted to sit and wait for this gap to form, this is normally, but I'll make a separate video for this. This is normally, you know, the new day opening gap, where it's just creating between that 16:59 to 6 o'clock. It creates a gap. It's important, and you can see how price respected it to run higher, but still didn't get up there. But anyways, at this point in time, I wasn't in front of the charts. I didn't look at anything. This is not where I'm getting interested in trading. I then, because I'm in a different time zone to you know, the US, I trade the US time zones, but I'm in a different time zone. I'm South Africa, and I'm awake at this point in this time of the day, where you can see this is like 2 in the morning in the US, and I saw this big consolidation just going sideways, and I thought, okay, so maybe in London we'll get a setup to run these highs, or maybe we'll just do nothing till we get to the PM or the AM session in the US later today. So sure enough, we saw some bearish move down here, and then that formed a fair value gap. Let me just show you, and let's make this maybe a blue color so you can see it. Let's call it IFEG. I did not take this trade because it never tested it, so, and it took out these highs, so I'm not interested for price to come down here. Then another IFEG formed. No, this is just a fair value gap, not an IFEG, and the difference here is this was a fair value gap created, and we tested the fair value gap, and I thought at some point, if we take the swing point from here to up here, we might see some entry around this line into this, you know, IFEG down here, but we never got it. This fair value gap was holding price nicely above the 50% and within the range, and I was just looking for a candle to push out and, you know, validate all this rejection for me to take my trade. And then obviously target this blue line is the news from yesterday's top candle, and then remember the red line is those equal highs. And I'm going to show you so you don't think I'm cherry picking all of this. That was my entry right there on that open of that candle. Little bit of a drawdown, but like, you know, a couple of points, and then we saw going right up in here. But I've kept my take profit at that equal highs, because I was convinced that we're going to go there. At this point where we take this high out, I moved my stop to break even, so it took about 3 minutes. I was at break even. I did not worry if I wasn't going to get that equal highs, and it came and stopped me out. That's fine. I'll wait for the AM session to start in New York and then look for a setup there. But this was the entry. I didn't get the entry you know, obviously from the bottom, and like some people said I did, I didn't get this whole move up here. I was waiting for the right high probability setup that I'm comfortable with, which this was, and it paid well. You know, I think it was $1,200 or something that I got from this trade. It's not $3,000 or $4,000 or $5,000, but $1,200 or $1,000 a trade. You just need to do 10 of those a month. That's $10,000, and that worked out again, FOMC, and I'm sure if you want to pick some entries lower down, I wouldn't, and I never did, so there's nothing. Let's just have a look at what happened then at 8:30 this morning, because there was some news. There's 8:30. Now this candle is not a violent candle. I mean, it made a high, it made a little low. We've already took the high out, and we've already took the low out. There was no fair value gap, and this is on a 1 minute. Maybe if you pop down to a 15-second, which I'm not trading, you might have seen some entry there. There was also 10 a.m. some news. Let's see, where's 10 a.m. It's this little candle here. Again, spiked down, went up, so there was no entry here. So the red folder for today did not present us any opportunity to trade. So if you're trading this particular strategy, today was just a no-go. If you wake up early in the morning to see what you can do with FOMC, because the rule is that liquidity on both sides, they're going to reach for both of those sides. And obviously the top side of the liquidity that was printed with FOMC was almost lining up with that equal highs, so that gave you that extra you know, extra space to take some more money out of the market. So ladies and gentlemen, that's all I've got basically to share with you guys. I just wanted to show you my entry and why I took it there and why. So obviously you can see I got stopped out yesterday on FOMC, but at break even, so I didn't lose any money. And then just waiting for the setup to form, you can save yourself a lot of emotional roller coaster up and down and actually book some money. I've been doing this for you guys live for the last 2 weeks, and so far I think we are 6 for 6, and obviously nothing today because there was no opportunity or no, you know, no setup. Now, I wouldn't trade anything further today. Tomorrow is Friday. You can have yourself a long weekend, and I will have a look on Sunday what the news calendar looks like for next week, and hopefully there's some more opportunity for us then. I will continue to do these videos and you know, following the strategy to show you guys it actually works. I've got a playlist that I'm calling it the red folder journal you know, playlist, and that's where I'm going to put all these videos as you know, for me journaling all these entries, and I could always go back and look at it. And then obviously I keep track of the hit rates and all of that to make sure what I'm doing is still in line with high probability and I'm not losing focus on the strategy. But the strategy is simple, guys, and if you want to learn more about the strategy, like and subscribe this channel, share it with people you think who want to learn something simple and straightforward. Drop me some comments below. I'll be happy to answer any questions or to guide anybody you know, through the process. Have a great day, have a great weekend, and be safe and don't overtrade. Bye bye.